Welcome, ladies and gentlemen, to the casino that is the stock market. My name is Shades. If it's your first time here, be sure to subscribe and give the video a like. It really helps the channel grow. Now let's jump into the video. Why a full-fledged bear market is still unlikely even after the latest sharp sell-off. For those of you who haven't been keeping track of the market as a whole, always check on the S&P 500 and what it has been doing over the past couple of days. As you can see here, we have been on an enormous bull run. Okay, here's the bear market. That ended we bottomed out way back here in late 2022, and since then we've been on a huge tear. There were some pullbacks, of course, along the way, but overall we have been climbing higher and higher. And if we can draw the trend lines we want. At the end of the day, look, we're trending to the downside now, and it does not bode well for longs right now, because if we don't start recovering from this huge pullback, we will see this come down lower. We've had pullbacks, as you can see, many times, and usually after about 3 red candles. Here we had 2 red candles and we immediately continued the bull run. 3 red candles continued the bull run. 3 red candles, 1 strong green weekly close. And let's look at the MACD here real quick, because it's a good indicator of whether we're going to continue here or not. Okay, so we crossed under on the MACD here, and we went down from a 448 to a low of 414. We crossed over, and we just went on a massive tear for almost a full 8 months. And we got a cross under here. We came down from a high of 526 to a low of 494. And then finally we crossed over again in late May. And since late May up until mid-July, so 2 months, we had 2 months of just climbing action. And then we pulled back yet again. And this time we pulled back 3 red candles. And finally buyers decided, hey, we're going to step up here at 509, 510. So the difference between then and now is this pullback here was from 564 to 511. That's a 50, what is that? Yeah, that's a $53 pullback. Like I said previously we only pulled back like 20, 30 bucks at most. But this was a fast one. At 3 weeks we pulled back 50 bucks. Here we pulled back 459 to 409. That's a whole $50, but this was over the course of a couple of months, as you can see. That's a lot of weeks right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks of downside before we bottomed out. This was quick. 3, 4 weeks of sharp downturn before finally some recovery here. And buying pressure here is taking control. But what is concerning is if we do not hold here. Let's look at NVIDIA. NVIDIA is a great indicator of whether there is strength in the markets. But buyers did step in at support here at $100. I remember telling people buy under 100, buy under 100. I'm not kidding you guys. I was telling people buy under 100. When it did go under 100, I alerted it and told everyone. Let me see if I can find the alert. There it is. Where is it? Yeah, there we go. Added 10 shares of NVIDIA at 93.80 and 200 shares of Riot at 7.30. And we got that huge bounce, so I sold it off once we hit 100 plus. Because I'm a swing trader. I'm not here to hold it long term on my swing trading account. But that was a good swing, easy money, right? All you had to do was wait and be patient, let it come under 100. It will come under 100 again. And that'll be an opportunity to add, but you got to be patient. Don't get so impatient that you buy a top. Like the people that bought it 1,000, 1,200, 1,400. Anyways, buyer stepped in at support. What I'm going to look for, at least on the lower time frames here on the daily, is we need to break out of this downtrend. Not just SPY, but NVIDIA. Because NVIDIA starts showing strength. If semiconductors start showing the strength that they were showing back then, we will see the market rise as a whole as well. Because Nvidia, when Nvidia starts struggling, we see the market as a whole come down as well. So if we can look on Monday, if we can get Nvidia to cross over in the MACD here, because it's about to cross over. Let me just hide everything and just show the MACD. You'll notice that white line is about to cross that yellow line, the signal. The last time we had that happen, that marked the end of the short-term downtrend, and then we went from 80 to 140. Well, obviously I'm not including the fact that we forward stock split. Then we crossed under and we had this downtrend again, and the cycle repeats. That's how it is, right? Cycles repeat. So what I'm looking for on Monday is for buyers to step in and that MACD crossover to happen. And if that does happen and everything works out, we will not only touch this trend line, but we will break above it and start climbing higher, and the bull run will resume at that point, barring any negative catalyst, negative headlines that could send the market as a whole tanking. So some people are calling this a growth scare correction. Let me just read through this real quick. Bank of America says the recent stock market sell-off is unlikely to be the start of a new bear market. Credit remains stable, and only 3 of 10 signals of a market peak have flashed. The S&P 500 fell as much as 8% since its record high in July, while the Nasdaq 100 plunged more than 10%. The sell-off was driven by a weak July jobs report, the unwind of the yen carry trade, and concerns of an imminent recession. So that's really what the scare was all about. And you know what? I know people get scared by recessions, but you know what? Give me a recession, because you know why? Because Nvidia is going to be under 100. It's going to bring a lot of good stocks nice and cheap. So if you missed out in the previous bear market that ended back in 2022, and we get a recession, as much as that sucks for people, as a trader or as a long-term investor, hey, give me that dip. I want the SPY at 400 again or lower. The cheaper you can give it to me, the better. If you're a long or if you're a swing trader. If you're a cheapskate like I am, I'm a cheapskate. So I love corrections. I love pullbacks. I love bear markets, whatever you want to call it. It's more than likely just a typical correction that occurs on average every single year. 5% pullbacks are common, occurring over 3 times per year on average since 1930. And it's not so much that. It's not so much that. It's if we, like I just showed you on the technicals, despite the fear and greed index right now, we're at extreme fear. So this is when you want to buy, when everyone else is extremely scared. But what I want to see in the technicals is that breakout. We need to see Nvidia break out of this downtrend. If we see that, it's going to get real bullish real fast, especially for Nvidia. And it's going to get bullish for QQQ. I just said QQQ. QQQ, it's going to get bullish for QQQ as well. And if you'll notice, they follow each other, right? Look at QQQ. It's about to cross over in the MACD as well. So Monday is going to be, it's going to be key. It's going to be very important for the market. If we can get that breakout out of this downtrend, a lot of people are going to turn bullish. And we're going to go from fear to extreme, we're going to go from extreme fear to greed again. And other people are going to chase it up for us, and we already bought nice and cheap. I don't know what you guys have been buying in this downtrend, but I've been loading up Riot stock down here. The last time Riot stock was this cheap at 774 was back here in late April of this year, and then again back in October of last year, and then again the last time we even were up here this low, or down here this low, was April of 2023. So it's rare that we come down this cheap. And the only time we've come down even cheaper than that was that bear market where Riot came down as low as $4. So to me, I'm accumulating stocks that I know are volatile and that are good companies. Or in this case, I'm just getting some Bitcoin exposure, really is what I'm doing. And it's volatile. If Bitcoin starts ripping, you're going to see miners, they're going to explode as well. And they can explode 10, 20%. Like here, look at this. It just ran. It just ran from 9 to 20 for a nice 100%. So right now I'm accumulating this one down here at $8. And I'm flipping it, but I'm also holding some for a bigger swing to $12 plus, because that's a 50% from $8. So I'm just showing you an example of what's possible if A, you're not scared, B, you're willing to buy the dip, and C, you focus on the good companies. Or if you believe in Bitcoin, then get some Bitcoin exposure through Mara stock or Riot stock or the many miners that are out there. But overall, the market is you look at Microsoft. We're getting ready to break. Like Monday's going to be very key. So Monday, be ready. If you're in the Discord, if you're in the premium Discord, get ready for some alerts because if we break out, we're gonna see a big green candle, and we're running. Like it's gonna get super bullish. If we get rejected here and this downtrend continues, it's gonna be bearish because people are gonna see that and puts are gonna be they're gonna be coming in like crazy, and shorts are gonna be piling on. It's going to be an interesting Monday, to say the least. And that's it for the video. Short, sweet, to the point. I'm just letting you know how I see the market. Maybe you see things differently. I look at silver as well. I forgot to point out silver. Silver, this thing bottomed out down here at $20, and it ranged between 20 and 23 before finally creating a higher high, higher low. And now we're ranging between 24 and $30 for all intents and purposes. So we're seeing a lot of stocks at the bottom of their ranges just sitting there, and we're seeing Nvidia, QQQ, a lot of big boy stocks just getting ready to explode. So in my opinion, uh, we're seeing the lower caps lag, and there's going to be a good opportunity there, in my opinion. And I'm also keeping an eye on Bitcoin over the weekend. You can keep an eye on Bitcoin over the weekend because Bitcoin does, it's 24/7. So Bitcoin right now, it's kind of been going nowhere, which is what I would expect. You can see here we've been going nowhere. It's like we're waiting for something, some catalyst headline. We're waiting to see if more than anything, I think we're waiting to see if what the Fed has to do or say in terms of fears of a recession and the jobs report being what it was. But once those fears are tamed, I think we'll be fine. But that's just, again, this is just how I see it. On the technicals, though, we might get a pump on Monday. That's it for the video. This was way too long.